Thank you very much, sir. I think just by listening to what he has said, I think we all know what you have an idea of what we are in for. And I very much agree what Helen said earlier about Africa being an equal contributor on a global scale, at whatever level that we can think of. And as the CFO was just speaking now, I was just thinking about, I grew up in an era where, I mean, it's still around in most cases, where everything about money was what was in your hand. I remember keeping money under my pillow. I remember, how many of you had that thing? I'm not sure what you call it, but in my language we call it kolo. Piggy bank. And you know, that's I mean, how I grew up, you know, understanding it, what money is, you know, and what you can use money for, basically what you see around you. And I remember at that time, there was a time in Nigeria where these banks called community banks started. And I remember my brother and I went in, we had this card that whenever you put in maybe 10 naira or something, you write it in the card. And that's what you carry around. And now I'm looking at how things have changed. You know, with a flip of a button on your phone, you can receive money, send money, do whatever, invest money. And I think just looking at what this, I mean, the person I know from Curnance is this man called Jeremiah, looking at what his vision is and his commitment is, I think it's really worth celebrating, you know, people who are ready to take us into the future. There's so much that we have now that is going to be obsolete in the next 5-10 years, you know, and when you see people that are taking us into the future, I think they are worth celebrating. Okay? All right, so we are going to move into the next part of the program, which is going to be a keynote address from Mrs. Adenike Ogunsugba. Mrs. Adenike Ogunsugba. So who is Mrs. Adenike? She is a skilled, accomplished banking professional with over 2 decades of leading industry expertise and is stellar record of promoting substantial growth and business development strategies for top banking institutions. She is proficient in all aspects of bank management and operations, including retail, commercial business, account management, marketing, relationship management, customer service, staff coordination, product sales, and recovery of delinquent loans. And that's a very important part for, I think, for any bank, recovery of delinquent loans, especially in this kind of economy that we have now. So she has a proven track record of delivering innovative corporate strategies that ultimately increase revenue, customer retention, team performance, and unwavering national staffing and commitment to customer service, with the ability to build productive relationships, resolve complex issues, and win customer loyalty. Wow. She demonstrates great competence in managing startups, building still divisions from scratch, and redefining banking boundaries using the Blue Ocean strategy. She is a certified IFC trainer with a genuine passion for training, mentoring, and coaching. She's an environmentalist and an advocate for sustainable development. So without much ado, I would like us to please welcome Mrs. Adenike Ogunsugba joining us live online. Please put your hands together.
Good afternoon, ladies and gentlemen, and you're welcome to the launch of Curnance. And I'm going to speak on the future of FinTech and Curnance. Of course, the FinTech is reshaping the financial services amidst economic, political challenges, and a global pandemic. We have seen how FinTech has evolved and how FinTech is reshaping the financial services across the globe. And some of the ways we have seen this are in consumer adoption. There is a growing use of FinTech propositions by challengers and incumbents alike. Who are the challengers? The new FinTech companies, and the incumbents are the traditional institutions. We have disruption to collaboration to ecosystem. The incumbents are now adopting a multi-pronged strategy towards working with FinTech providers. We are seeing infrastructures now being layered on FinTechs, and FinTechs infrastructure also being layered on the incumbents. So we'll not call it more of a competition, but more of collaboration between the challengers and the incumbents. Then there's a global expansion. FinTech propositions and organizations are expanding across borders, fast-tracking development in certain geographies and subsectors. We have rise of non-financial services players too. Big tech firms, they are leveraging their consumer relationships and technological advantages to enter the financial markets. And of course, this is riding on the back of the regulatory support. So global FinTech adoption has reached 64% and has become mainstream in most of the markets, with South Africa recording 82% FinTech adoption. Not surprised though, because the biggest banks in Africa are in South Africa. So when you talk about financial services, South Africa is the most matured market. So I'm not surprised that South Africa has such a huge adoption rate in FinTech. The investment and valuation of FinTech in the last decade peaked in Q2 of 2021. We have over more than 20 times return over average in Q2 of 2021. And I believe that there is still more room for growth, much more room for growth than even in the past. 32,000 FinTechs globally have attracted over 500 billion in the last decade, with over 40 billion in crypto funding in 2022. Global public valuation of 1.3 trillion in 2021, 5,684 deals worth $210 billion have received global FinTech investments since 2021. But there's an area that has not been touched. Like when I was being introduced, somebody said, part of my profile read that I'm an environmentalist. The FinTechs with ESG capabilities, including jurisdictions setting up incubators, especially focused on ESG solutions. We have a huge gap in this space. It is a space that has not been properly invested in to date. And that is integrating the social, the economic, and the environmental dimensions into FinTech businesses. So I think it has the biggest growth trajectory out of all FinTech subsectors. So we should look out for more funding over the next 5 years for those FinTechs with ESG capabilities. Next slide, please. So we have key success factors and differentiators shaping the FinTech landscape globally. The United Kingdom is often used as a case study for market-leading policy infrastructure initiatives like open banking, payment platforms. And of course, Singapore is a regional leader in Asia, which offers strong demand potential given high adoption of technology and FinTech. Canada is home to some of the top FinTechs globally some of the top FinTechs leading to higher investments. See a lot of investments going to Canada because Canada play host to some of the top FinTechs in the world. And for US, we have abundant capital across growth life cycle. For Dubai, consistent and strong regulatory support is also encouraging the growth of FinTech. While in India, strong pool of technical talent has been key to attracting global FinTechs to India. We all know that India is at the forefront when it comes to technical talent in IT and anything related to FinTech. For Nigeria, the Central Bank of Nigeria has developed a lot of progressive policies that have actually helped in digitization, in cost reduction, in increasing efficiency, and in building client relationships. So this has also contributed to the growth of FinTech in Nigeria. And of course, in Australia too, we see that Melbourne is emerging as a strong FinTech hub, attracting global FinTechs. We have other countries in Africa too that I didn't mention here. We have 11 key markets. We have in the east, we have Kenya, Tanzania, Uganda. We have in the north, we have Morocco, we have Egypt. South Africa is there in South Africa. Then we have Nigeria, we have Ghana, we have Cameroon, we have Cote d'Ivoire. They are the 11 key markets in Africa to invest. And of course, the leading of this market is still South Africa. Next slide, please. So this is, I just wanted to bring it home. This is Nigerian FinTech markets map, covering a wide range of FinTechs across each category, supported by a robust ecosystem of enablers. So what are the FinTech categories we have? The payments, the mobile money, digital banking, the lending, the crypto. We have the savings, investment, the crowdfunding, the insurtech. And which are the enablers? Venture capital, private equity, associations and facilitators, accelerators, incubators, and the regulators. And we can see that in Nigeria, a lot is really happening in the FinTech space. You can see quite a number of FinTechs that have evolved and they're actually doing well. In the next slide, it will show us where they're actually making the revenue from. Next slide, please. So if you look at this slide, we see that is the major focus areas for FinTechs are in payments and lending, collections, payments, remittances, and lending. You can see 25% in payment, lending, 17%. SMEs, we don't have so much in the corporate space, but the focus is more on the consumer and the SME, and lending and payments are actually leading the way. For the savings and investments too, it's coming up, but I know sometimes the challenges with FinTechs have to do with management of the assets and liability of their books, the balance sheet. So they are not really, they still need to do more in the management of their assets and liabilities to make more returns in the savings and investments category. And then high cost of funds too, because FinTech tends to pay more than traditional banks. So people try to put their funds in FinTech, to generate higher returns. But that needs to be managed so that they can generate more revenue in that category. Next slide, please. Okay, so investors' interest. Actually, investors are more interested in payments, mobile money, and digital banking and lending. You can see the kind of investments that have come into this space. Like it was shown earlier, the payments and the lending are receiving more attention, more focus than savings, investments, and crowdfunding. The insurtech is also trying to come up, and I know it's a big space, and with time, with the adoption of insurance, change of mindsets, and all that, that space will also grow. But we are seeing more of investments in payments, in mobile money, in digital banking, and in lending. And I'm sure that's what Curnance is also off to redefine in the markets. Thank you. Next slide, please. Okay, so the macroeconomic impact of FinTech on the landscape, economic growth, and I'm going to talk about South Africa economy again. Year-on-year growth is attaining 1.6%, higher than the modest 0.2% increase in previous quarters. So this is a potential top-line revenue opportunities for any investor, potential for local investors, international investors, and corporate players to provide funding, because South African economy is not shrinking, it's actually growing. Of course, there are other macroeconomic impacts, which include disruption to employment and income, regulators, stimulus, because the regulators try to come in on fee waivers, increase in transaction limits, which also is leading to reduction in margins and revenue. But we have opportunities in pre-digital ID adoption, leveraging mass distribution of funds, and conditional cash transfers. So these are the things that we actually deal with the reduction in margins and revenues. And for digital adoption across Africa now, we're trying to decelerate cash transactions. So there's increased use of digital and mobile financial services across Africa. In Nigeria, for example, with the introduction of the cashless policy, that actually created the platform for the fintechs in Nigeria to grow. Currently, the fintechs in Nigeria hold 60% of the market share against the traditional banks. So I think the impacts also are providing a lot of opportunities to stress test our digital capacity for future purposes and partner with banks that already have relationships with SMEs and access to distribution channels. The fintechs are coming and they are not actually starting on ground zero. Key partnerships are actually helping fintechs to scale. And of course, the relationship is symbiotic. Even the incumbents too are also benefiting from fintechs infrastructure. Next slide, please. So before we go to FinTech South Africa and Curnance, I want to talk about the FinTech CEO over the next 12 to 18 months. There was a survey carried out by BCG in February 2023, and the survey had to do with the top challenges that FinTech CEOs are concerned about in the next 12 to 18 months. And 59% is still on customer acquisition, because how do you run FinTech without a strong customer base, And slowdown in economic growth, of course, we've seen some of our markets showing very slow growth. Challenges on scaling their business model, higher interest rates, because now even with traditional banks are offering high interest rates now, so they're actually also posing a big challenge to the emerging fintechs. Managing credit risk or fraud, of course, in the area of lending, it's important that CEOs are worried about how to manage credit risk or fraud. And the need to reduce costs, of course, and improving governance and compliance. If you see governance and compliance, you see that just 4% is worried, because we already have robust framework for every fintech that comes in to actually comply with the regulatory framework. So the top priorities for fintech CEOs in the next 12 to 18 months will be to focus on customer acquisition. Customer acquisition is very, very key. And of course, there are so many ways you can acquire customer with the mobile penetration, with the net expansion, and then a lot of things you can do offline now. You can do a lot on expansion. Now, we talk about product innovation. That is very key, because innovation is the only thing that makes a fintech company relevant. If there is no innovation, everybody does the same thing. So you have to upscale, you have to do something different so that you can actually keep your customers, you can keep the revenue, and the revenue base can actually grow. Thank you. So let's go to the next slide. FinTech, South Africa, and Curnance. So South Africa is the largest and most mature FinTech market in the African continent, and I'm glad that Curnance is starting from that market. South African financial services revenue is estimated to be about $80 billion in 2025. South Africa accounts for 40% of the total financial services market value in Africa. South Africa and Nigeria will experience more innovation in advanced financial services, business-to-business liquidity, regulatory technology, anti-money laundering, and know your customer compliance. And South Africa is among the top 10 global society adopting cryptocurrency. 50% of African software developers are based in just 5 countries: South Africa, Nigeria, Morocco, Kenya, and Egypt. So as Curnance is being launched today, I'm sure Curnance is poised to overcome the challenges that have to do with scaling and profitability, that has to do with scarcity of time, of money, of people, of tools, that has to do with regulatory compliance and the governance. And I believe Curnance will overcome infrastructure challenges through a strategic alliance with major retailers and bypassing the need for a physical banking facility. Nobody is actually doing brick and mortar anymore. Curnance will focus on developing digital talent and partnerships ready to compete effectively in the future. Curnance will leverage on the wealth of a strong corporate governance to drive sustainability and growth into the future. Curnance will harness cross-border payments and trade expansion opportunities created by the African Continental Free Trade Agreement and the Pan-African Payment Settlement System. So this is a very robust platform for Curnance to take off from and key into, actually, to have a sustainable business and to grow, to target growth in the next years to come. Curnance will further deepen our tools and resources to ensure strong compliance and engagement with regulatory and legislative requirements, hence minimizing expenses on fines, litigations, and sanctions. And Curnance will deploy appropriate technology, tools, and other resources to effectively hedge and manage enterprise risk exposures. Thank you for listening.